Pulte Group posting strong second quarter earnings this morning, topping Wall Street estimates as demand stayed strong, boosting new home sales despite mortgage rates actually just crossing 7% last hour again. As a result, the stock is up nearly 6% today. It's up 80% for the year. Let's bring in Stephen Kim, homebuilders analyst at Evercore ISI. Great to have you. I don't think you're surprised. You've been pretty bullish on homebuilders for what, the better part of a year now?
Yes, that's right. We've been of the opinion that you're going to see significantly better than expected results due to the lack of inventory in the market. That was something that really convinced us last year that we should stay with these names, even though things were really looking like they were falling off a cliff. And in fact, that really has been rewarded. Investors who've stuck with the builders since, let's say, last July, you're up about 90% for many of the builders, including Pulte. And Pulte put up a whopper of a quarter this morning. I mean, it was really across the board better than expected. And not only that, but they leaned into it with their guidance and they said, look, these margins that we're generating, these are not, there's no shoe to drop. It was a phrase they used on the call. They're forecasting them to stay very strong for at least the next couple of quarters.
The incentive piece of the puzzle, and I ask that on a day where we did see Case-Shiller home price numbers, where, again, an increase month on month for prices in the major metro areas here in the U.S. And as we've seen, commodity costs and certain costs associated perhaps even with labor begin to come off right now. I mean, is Pulte and the other home builders really in a sweet spot here in terms of margins?
Yeah, they really are. I think that's right. A year ago and even a year and a half ago, people were very concerned that the rise in prices was just simply, unsustainable. And they saw it as something unnatural, which we actually, by contrast, saw as really the natural result of a complete and utter lack of supply. Nothing sells like a shortage. And, basically these home prices got to where they were because somebody was buying them. That's what you're still seeing today. The home prices are high. The mortgage rates are high. But there is no supply out there, and the situation cannot be fixed quickly because, frankly, we've been underbuilding this country for about 15 years. It's still hard to build houses. Pulte will tell you that. They'll be the first ones to tell you. It's not easy building houses, getting approvals and finding all the labor and materials to do it. So, therefore, you're going to remain in this tight inventory situation for the foreseeable future, and that will be a benefit to the margins.
What does their order backlog look like?
Their orders were fantastic, actually. Their orders surpassed expectations. They were up like 24% year over year. More to the point, the communities that they are selling out of are generating more sales per community than they were in the pre-pandemic period. We attribute that to a number of things, including the fact that builders in general are trying to make sure that they are offering a product which maybe is a little smaller, maybe a little bit cheaper, or smaller so that they can hit a price point. And typically when you're doing that, you're selling more homes per community. That's sort of built into your business plan. So their productivity in units is very, very strong, and that's really a help to them in leveraging their fixed costs.
Quick question for you. Stock's up 82% so far this year. Is it still a buy here?
It is. I will tell you that when we've looked back, I've been doing this business for a very long time. You had Mike earlier on. I've been doing it probably as long as he has. And I'll tell you, when we've gone back and looked at what kind of runs you can see in home building stocks, we still have a ways to go. I know it seems like an awful lot, but you got to remember where you were starting from was basically as low as it ever gets. We've seen runs like this last longer than this, go further than this, and certainly hit valuations that are higher than where we're at right now.